Man, it is a Tuesday, and you know what that means. That means that we're going to have Basil Chapman on. Basil is the author of the Opening Call newsletter. You go right on the front page, actually. We have it up right now. Strongly recommend checking this out. Of course, he's also the host of the Tiger Technicians Hour on 10 a.m. Eastern Time, right here on TFNN every day the market is open. Get the Opening Call newsletter. I can't stress it enough. It is one fantastic analysis. Anyways, I was talking to someone the other day. They got in. They've been loving it. Okay, and so recommend doing that. Again, you get these 90-minute live webinars from Basil. These are subscriber only. The most recent one he did was November 14th. I think it still holds true even after all this volatility. And you get these fantastic long-form videos at the end of the week, kind of going over what happened during the week, what the setups are for next week. It is fantastic. I think there's a ton of value in this newsletter. And I want to say to everyone listening out there that might be just discovering TFNN that we offer a 30-day money-back guarantee for all newsletters if it's your first time purchasing them. So you can do all this risk-free. For whatever reason it doesn't work out for you, we'll give you your money back. But I'm betting that it will. Basil, welcome back to the States.
Thank you, Jacob. How are you?
I'm doing well. Man, you leave for a week and the market just starts collapsing. What's up with that, Basil?
Well, fortunately, we were raising cash and going short. So we anticipated, based on a number of factors. Actually, let me do this very quickly for those who are new to my work. I try to identify the lowest low bar, then count each successively higher peak, alphabetizing them sequentially with an uppercase on the way up, lowercase on the way down. A, B, C, D takes you to the fourth highest peak. It can go even higher to E, F, and G, but in a buy signal that gets upgraded to a buy mode invariably says that the price should go to at least a D, whether it's a 1-minute chart or a monthly chart, doesn't matter. So you can see that in this particular instance, we did go to that peak D from the buy signal we got on the 13th at the low, 13th of January. We're into 45,054 on the 31st of December. And what happened was there was a very sharp pullback. On the next rally, what we did is we went short. So we've got a core long position because at this point, I'm still waiting to see if that initial 13th of January low is going to be taken out. But we had an insurance policy, so we're short there, but we also are short the S&P. What I wanted to show you is that there are a number of factors that I look at within the context of looking for lows or highs. Very often what I like to see is a double top or a round number. I'll just give you a clue to what we're looking at here, because the 45,073 weekly high that was made back in December, what we did is we pulled back and then we ran up again and just missed it by 45,054 by less than 20 points. And that became a double top. And what I'd said is I don't see a kind of a huge sell-off with everything coming down at the same time. What I see is a rotational correction. And the rotational correction says that we could remain in a rectangle formation. You can see between these borders here in the Dow, and that's going to be very important. Yes, this is a very nice turnaround from the low today of 42,347. And then I'll go through a couple of things we look at in this particular candle in a moment. But I just wanted to say that within the S&P, did I type that in the wrong place? Probably I did. Let me try that again.
I just did that earlier, Basil.
Yeah. So this is a very bullish candle.
Okay.
But we did take out the left side low in the S&P. Now we are short the S&P, but at the same time, we're taking a little bit of profit, and the S&P actually ran all the way to 5732.59. Now, I'll talk about this candle in relation to the same thing with the Dow. We don't know what we kind of know what Trump will focus on today, this evening, but at the same time, the market is saying that one thing at a time could be resolved. So the geopolitical aspect, if anything happens with Zelensky and Trump, so that there's just some kind of amelioration of the tension, then what we might see is that the gold, and we've got a break coming up.
Yeah, Basil. Please stay right there, Basil. Folks, we'll be right back with Basil Chapman after this break. Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. I am joined right now by Basil Chapman. Basil is the author of the Opening Call newsletter. He's also the host of the Tiger Technicians Hour on at 10 a.m. Eastern Time right here on TFNN. Basil, before we went to the break, we were taking a look at, or about to take a look at gold.
Yes. So what I was saying is I've always thought of gold as it really represents a kind of insurance policy for geopolitical and economic strife.
Yeah.
And people have been wondering why is gold going up and the GDX, the gold miners are not showing it, silver's not showing. That's because gold is independent. And I like to look at different, I call them icons, whether it's the bonds, the dollar, gold. I look at them separately. There was a moment where they used to work in a certain way in sync. One would go up and the other one would go down. It hasn't been that way for a while. So gold, I think, is quite independent. So we'll know if gold trading at 29.29 right now, and we've been long gold for quite a while, still going to keep holding this gold because it still looks strong. If gold starts to take out the low that was made 3 sessions ago at 28.44,
yes,
that would imply that it's going to have a little bit a deeper digestive phase than just a pullback. And so that's what I'm watching. But
and are you looking at a digestive phase as kind of like just sideways consolidation, or are you looking
sideways, sideways consolidation? Could even make a slightly lower low, but the 28-21 this is the 14-period moving average in the weekly chart. That's the black line right there. That should hold. And look at the distance between the 9 and the 14 here. This is all very strong. So I'm looking at gold and I'm thinking tariffs, there's a lot going on.
Yes.
And therefore that becomes the insurance. I just wanted to get that out the way. Now, the other thing is this. I need to talk about this candle because we might even close towards the high of the day because there's a lot of anticipation going on here, but it's just one aspect of the market. So wherever we close, we've got this long wick. If for any reason there's by 10:30 during my show tomorrow between 10 and 11 Eastern time, if there is, say, disappointment or there's a further analysis about the speech tonight and the market pulls back and the Dow closes for about I'd say 60 to 90 minutes, goes under 42,730. That's this halfway marker for the wick. That's going to be a problem because we could retest the lows. If, in fact, for 2 out of the next 3 sessions, there's a sharp close above today's high, that's going to be very important. But the technicals, the 9-period moving average is still very weak. The MACD, the moving average is very weak. Relative strength, stochastics only at 22%. So it's going to be a lot of optimism that really gets the Dow back into the 43,000, say, 500s. Yes. So that's what I'd be looking at. That's just on a very short term. But most importantly, what we're looking at is the overall picture. If you're looking at the monthly charts of the Dow, this is still a very strong chart. If you're looking at the S&P, the same thing. I wanted to bring up one chart. I showed it this morning. So I've been looking for a long time at the S&P 500, and I want to see the IWM Russell 2000 really start to come on strong, and it hasn't done that. We were long from the very low, and we've now taken profits. We're out of that position. We'll have to restart it, and that relationship was the same as the XLF, which is the S&P money center banks.
Yes.
The XLF, and the KRE, which is the regional banks, and they've been very, very weak. So there's a lot of work to be done to get the overall market to rally, as opposed to just sudden big spikes in a couple of stocks that really help. But this is the chart I wanted to show you on a monthly basis. This is not right for the moment, but it's something I'm watching very closely. If you look at this, you see the way this pink line, every time it got to a high, it pulled back together with the blue line. Every time it made a low, the blue and pink lines moved up sharply. Once it made a top, the pink line made a top, it kind of stalled the blue line. And then eventually when they came down together and they went up together. Well, what is this? The pink is this is a bar chart, not a candle chart, a bar chart, a monthly chart of the XLF, which is pink, and the blue is the S&P. And look at this pattern. Look at this. I mean, look at the synchronicity here.
Yeah.
So, I'm watching it very closely because now for the first month we've got a pullback here in the monthly chart of the S&P. Month has only just started, so it's got a long way to go. but you've got a pullback from a high in this month, the month of March, in the XLF, and it's starting to pull back. So looking out longer term, you can see why I still say I'm still longer term very bullish, even intermediate term very bullish. Shorter term, we'll see what happens here. We've been negative, but I might have to change that in the next day or two. But this is a chart that I'll be focusing on in 2025, because if the pink line starts to go back up to new highs, there's a good chance the S&P, the blue line, will follow. So this is something that's very important. And as you can see, look at the synchronicity at the top right there. This is not quite the same thing yet, but I'm watching it very closely. And look at that beautiful bottom. They both made lows together. So that's something that I'm watching. So within the context of the overall market, the SMHs, of course, very, very important. So the semiconductors went underneath very important support. This is a weekly chart right in the middle here. So as it stands right now, it's still under this green rectangle formation. The very large one has 220.49 as a low from August of last year, but this one was around about the 230 level. So the SMHs have not broken down, but they're not really showing leadership. And I like to think of the semiconductors, these are the chips. This is the oil sector of the 1900s and the 2000s. Everything had oil. Well, not everything, but just about everything had oil. Now everything has a chip. So this is really important. And I would like to see by May or June that the semiconductors actually, instead of breaking under the 220 level, have started to move up towards 270, then 280, then try to test the all-time high. That's going to be the challenge. So overall, short term, I think we've had a very strong pullback, but the technicals are starting to improve with today's action. We'll see if there's follow through tomorrow on whatever's said tonight, but it's all a work in progress. So I don't think any one statement is going to make a change in the market. I think there's a digestive phase that is continuing. I wouldn't be surprised if we start to see some testing, even if we have a good rally, that we still come back and we still do testing towards the lows. So I'm anticipating that this is a work in progress, and that slowly, one by one, I need to see the regional banks start to move, the IWM start to move. I want those sectors to really improve, because that's important to the overall strength of the market. And that, of course, includes the Van Eck Semiconductor ETF, the SMHs.
Sure. And, I want to go back on something with the gold, right? I mean, this is fantastic, and I'm with you on this. The prevailing theory, and I've never focused on gold too much, right? Prevailing theory that you're seeing is that they're waiting for the spot contract, or the spot price of the contract, to really situate at a certain level, and then these miners can start enjoying higher profits, right? And they start mining more. Are you seeing anything in the mining sector itself that would indicate that you might see a hot year for them, or is this really just completely divorced, and it has been for a while?
Well, the whole thing, for instance, I'm showing you ASA, which is a South African gold mining. It's like an ETF. They have about 5 or 6 gold shares in there. And look how this is working. The 2548 high of August of 2020, we went above that, and we're pulling back. So I think it's stock by stock. It's not sector per se.
Sure. Basil, I wish we could have you on longer, but we're going to see you tomorrow at 10 a.m. Okay, Basil?
Thank you very much, Jacob. Have a great evening.
Take care.